Hello everyone, this is Own Wall Street with the TradersPerspective.com doing the Wednesday evening midweek part of my two-session weekly analysis update. I'm looking at crude oil presently before you. This is the daily time frame. And today was a day of disappointment for the bulls, that is. I have been expecting oil to go down to this level in the previous video that I made. I did mention that I expected the price to bounce back and test the 50.12 level, 50, and it actually ended up hitting 50.19 or so. And then we had a nice little bounce the other day, and then with the inventory news, it just could not get above this level right here. Um, this actually ended up being the 61.8% Fibonacci level that we were trying to. I'm sorry, this was the 50% level, and this was the 61.8 level. We kind of closed below it, and then we got above it, and then today we were pulled back below, and we're sitting right on the 200 period simple moving average, denoted here by the purple pinkish line. And as you can see here, my moving averages are indicating a bearish cross, so the bear trend continues, at least in the near term. Again, I am repeating myself. For those of you who have seen my previous video analyses, I'm looking for a test of this trend line here, and I'll zoom out in a second so you could see it. And I'm also looking for the $47 level to be tested. So let me go ahead and just take things step by step. So going down to the 4-hour time frame, you can see that on the lower levels we were fighting with the 200 period simple moving average, and we were also fighting with this $50 level. And we did in fact have a failure here and a second failure here. And so given that we are pinched between the 200, which if you remember on a daily is right below here on these where these wicks are, and here, so we're now pinched between the 200 period on a daily and the 200 period on the 4-hour chart, and we are looking to head lower. That is my call. Looking back at the weekly time frame, I'm going to show you that trend line that I was looking at, and just get that in the view for you a little bit there. This is from the lows that we experienced back in the earlier part of 2016 at around $26, and then price has respected this line for quite some time, and then failed. When we did get back above it, we hit 54 up here at the top, and the wedge said no thank you, and we proceeded to go down. Now, I will show you something interesting, though I don't really think it means too much at this moment in time. We are sitting on the 50 period simple moving average on the weekly time frame. Now, a break to the downside will accelerate the flow, so it'll be a quick shot down to 47 area to this trend line here. So that is worth of note. Also here, the trend line here that's denoted by this green line right here. Let me change that for you to make it a little bit easier to see. That's not going to help. Let's make it blue. So here we go. We basically started here. We had this trend line here, and I try to go by the rule of at least 2 touches. 3 or more is obviously better to show the strength of the trend. So here we had one back here. If you can see that in the camera frame right here. We had a second test here, third test here, and then a fourth test here, and now I expect a fifth and a possible break, but I expect a possible near-term bounce first. So let me take things in stride. Going back to the daily time frame, what am I looking at towards the end of the week? Today's close was bearish. It was not a good day for those that were bullish. I personally was looking to take a position going the other way, so I was hoping that price would bounce up to me to the $51 level or so, where this 50 period simple moving average and this downtrend line on the 4-hour chart is. Price was so weak that it couldn't even get there, so I was a little bit disappointed, but I took a trade on something else anyway, so not that big of a disappointment, but just something that I had in mind, and it just didn't play out due to the weakness. So once this level here breaks down under the 200 period simple moving average, I do expect price to test this this uptrend line here, and a failure to maintain this level and seeing price move lower. I'll go ahead and zoom out a little bit. Then if this level does fail at 47 and this trend line is broken, this overall trend that we've been seeing over the past several months as far as this bullish trend is now in jeopardy. So once a break does occur, and there will be more video updates between now and then, so don't get upset or get too anxious here. Once this is tested, I do believe we will see a little bit of a bounce at least during the middle of that week, whenever that does come. It could be next week. It depends on what happens with Friday's rig count report. So, in the near term, I am looking for more downward pressure. I would not be taking any longs here at this level, and I would also be wary of this downtrend line. I'll just drop down to the 4 hour time frame for you so you can take a better look. And again, this downtrend line has been the key level, and now we have, we almost had a bullish cross on my 4 hour time from here, but we had that reversal, so that negates that for me, at least in the meantime. So we would be looking for price to probably test this 200 period simple moving average again on the 4 hour time frame. Looking down at the lower time frames, you can see this is the hourly chart. It's just been, the bulls holding on for dear life on this 200 period simple moving average on a daily time frame. But again, I expect price to continue downwards down to this 47 market in the very near term, pending, of course, any geopolitical issues that may take the forecast and negate it. This is On Wall Street with the TradersPerspective.com. Thank you so much for watching on this Wednesday evening. Subscribe to the channel. If you have any questions, comments, please leave them below, or feel free to email me at thetradersperspective@yahoo.com. Thank you so much for watching.